For non-resident investors, owning real estate in Turkey offers a highly lucrative yield. But navigating the taxation process to protect that yield is uniquely deceptive. The Turkish Revenue Administration operates a digital portal called Hazir Beyan, a pre-filled tax return system. It is an automated platform promising a frictionless, entirely free digital filing process. The immediate appeal is obvious. If you live abroad and own property in Turkey, this system is engineered to help you settle your tax obligations with a single click and get back to your day. But there is a catch embedded in that convenience. By accepting the government's default math on this portal, you automatically lock your investment into the lowest possible bracket for tax deductions. The Turkish government has made filing incredibly convenient. However, that convenience is actively cannibalizing your rental profit. The 2025 financial baseline: residential properties have a 47,000 lira exemption limit, while commercial rents face a 20% withholding rate. Furthermore, failing to document rental payments through official channels incurs a 35,000 lira fine per transaction, capped at 35 million lira annually. This creates a core dilemma. As an investor, you have to choose between clicking through a fast automated portal or taking the time to build an optimized tax strategy. Treating your Turkish property taxes as a quick do-it-yourself chore rather than a strategic financial decision leaves thousands of lira on the table. The first option presented on the portal is the DIY lump sum method. This applies a flat 15% deduction against your rental income, regardless of the actual costs you incurred maintaining the property. It requires virtually zero input. There are no receipts to track and no accounting ledgers to balance. You just review the pre-filled form and click approve. The trade-off is immediate. By taking that flat rate, you legally forfeit the right to claim specific, potentially massive tax write-offs for your property. And there is a hidden bureaucratic trap. Once you select the lump sum method, the tax code locks you into that choice for 2 full calendar years. You cannot change your mind next year if you suddenly need to replace a roof. The lump sum method acts as a blindfold. You save an hour of paperwork today, but you lose visibility on 2 years of potential financial savings. The alternative strategy is the actual expense method. This route is designed to drastically lower your taxable income base by deducting the real costs of operating your asset. You are allowed to deduct standard expenses like lighting, heating, insurance premiums, and any repair costs incurred directly by you as the landlord. The most powerful deduction available targets recent buyers. If you acquired a residential property within the last 5 years, you can deduct 5% of its total acquisition value from your taxable income every single year. While this rule can completely wipe out your tax liability, it requires a complex calculation. You have to run a strict algebraic formula to exclude the portion of your expenses that overlap with the standard 47,000 lira residential exemption. The compliance burden is heavy. To use this method, you must maintain rigorous, perfectly organized documentation for 5 full years, ready to present the moment the tax office requests an audit. The actual expense method heavily rewards precision, but it severely punishes administrative errors. Executing this without a professional tax advisor carries high risk. If you live outside of Turkey, you must also navigate double taxation agreements. Double taxation agreements, or DTAs, are treaties that protect expatriates from paying full income tax on the exact same revenue in both Turkey and their country of residence. Activating this protection requires deliberate friction. You have to secure a certificate of residence from your home country, notarize it, and have it officially translated and stamped by Turkish authorities. The penalty for missing this paperwork is absolute. If you fail to file it correctly, Turkish domestic law automatically overrides the treaty, nullifying your tax benefits entirely. Then there is the commercial property variable. If your tenant operates a business in your space, they typically pay a 20% withholding tax, known as stoppage, directly at the source. If your combined commercial and residential rental income crosses the 1.2 million lira threshold, your entire tax structure shifts, stripping away standard residential exemptions. The moment you mix commercial and residential properties, or try to cross borders, the DIY approach transforms from a convenience into a distinct financial liability. Ultimately, every decision about which filing method to use comes down to a strict calculation of return on investment. This chart measures administrative effort against financial impact. Down here in the bottom left quadrant is the DIY cohort. These are investors with a single, older flat, no mortgage, and income just over the 47,000 lira exemption. If you fall into this low complexity group, use the free government portal and take the 15% lump sum. Tracking your actual expenses won't yield enough return to justify the effort. But look at the top right quadrant. If you own properties bought within the last 5 years, manage a mixed commercial portfolio, or live in a DTA treaty country, you belong to the professional cohort. This is the optimization threshold. If you are in that top right quadrant, using the free DIY system is an act of financial self-sabotage. The Turkish tax code rewards those who calculate the math, and it penalizes those who seek convenience. An expert tax strategy provides the necessary framework to guarantee the maximum possible yield on your real estate. The filing window opens strictly in March. If you plan to leverage the actual expense method, your invoices, documents, and treaty paperwork must be organized right now. If you are unsure which side of the optimization threshold you fall on, use the contact link provided to let us build a custom tax framework for your portfolio. Stop leaving investment yield on the table for the sake of a 10-minute web form. Maximize your assets.